Welcome to Accounting High.
Check out the Cash Flow Show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cash Flow Show. The Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
Oh, Nikole is vibing today. What's up, Nikole?
What's up, Scotty? It's
You're
Friday
excited
today.
about this topic. It's Friday, and we are talking about the biggest episode yet. This is going to be the most listened to episode of the show. I'm excited about this one too. We're talking about cash to accrual today. Nikole, tell me why you're so excited about cash to accrual.
I'm a nerd. Part of this was because we asked the audience, I posted on LinkedIn to see what people were interested in. A lot of my audience on LinkedIn is accountants. Somebody recommended that. And then I also was having a conversation with a client yesterday explaining the value of moving from cash to accrual. And I got a little fumbled up on trying to articulate it to them. So I ended up putting together a visual to show them and posted that on LinkedIn. It was a popular post. So you recommended cash to accrual, which is funny because
it was my suggestion for today's episode. I think we can talk about it more eloquently. Maybe we can address the issue and talk about maybe some actual reasons why you would want to make that switch. So rather than just talk about what it is and what cash to accrual is and what exactly we are doing as the accountant, we can talk about situations as a business owner that you would possibly need to switch over from cash to accrual.
We want to tie it back to why it matters, not just the technicality.
Yeah. These are the 3 signs that you should look for, or things that maybe could be your current situation now, that you should probably switch from cash to accrual.
I want to clarify switching from cash to accrual. Clients or other people think that I'm talking about switching your tax reporting from cash to accrual. And that's not what I mean, because we can actually maintain our financials on accrual basis as a way of managing our business better, and then still file our tax return on a cash basis, which is typically more beneficial for businesses. Some tax accountants cannot handle doing a conversion from accrual to cash basis. You may need to move tax accountants. It's definitely a conversation to have with whoever's managing your financials and your reporting and your tax accountant.
Yeah, because I do taxes. We prefer books in cash. It tends to work out better for the business owner unless forced into an accrual. Usually our clients aren't big enough to be forced into that. You've got to be over 50 million or even larger than that with these regulations now.
Right, from tax reporting.
Yeah.
How about when your clients are managing their books on accrual basis?
If they're managing their books on accrual, I don't know. We're doing most of our clients' books. All the ones we're doing taxes for in cash.
Cash, right.
If they're doing accrual, we must be adjusting entries from somebody doing the books, if that's what you're doing.
And so that's the thing. So typically I recommend thinking about making the move from cash to accrual around $1 million in revenue, because that's when your business gets a little bit more complex. There's more levers to pull. You've got more employees, invoices going out, and bills coming in. And so you've got more timing differences in terms of when you're earning revenue versus when the cash is coming in versus when you're sending out invoices. So it creates some complexity.
So at that stage, is that one of the signs you should switch, is that you've hit $1 million in revenue?
No, that's just, you'll start to feel the 3 signs we are going to talk about. You'll probably start to feel them around $1 million in revenue.
So that's the 4th phantom sign. You might be approaching some of these others. Cool.
Yeah.
My books give me the option to run a report in accrual. Does that mean I just switched my books over to accrual? Like if I'm in QuickBooks or if I'm in Xero, I know I have the option on the report to say cash or accrual. In Xero, my reports are defaulting to accrual. Does that mean my books are in accrual?
No, and that's where the confusion lies. There's actually 3 ways to look at your profit and loss statement. In QuickBooks Online and Xero, you can toggle between cash basis and accrual basis. And so I'll just go through what cash basis means. So cash basis is income is recorded when you receive cash from a customer and actually gets deposited into the bank. And then your expenses are recorded when cash actually leaves the bank. Okay, so that is simple. It's easy for small businesses to understand. Then we get into the way that QuickBooks Online and Xero present their accrual accounting. And I'm putting up quotes here when I say accrual.
Yes.
And that's basically, I actually refer to that more as invoice date and bill date basis accounting. Let's say you generate an invoice in March, but you date it in April. The revenue is going to show up whenever you date the invoice. So if you date it in April, it will show up in April, regardless of when you earn that revenue or when the deposit came in from a customer. And then on the expense side, if you're entering bills into your accounting system, if you date the bill in a particular month, that's when it's going to show up as an expense, regardless of when cash came in, regardless of when you incurred that expense.
Okay. Fair.
And then the third one, which was what we're talking about today, is like actual accrual accounting. The idea of accrual accounting is to match our revenue with our expenses. And the way we do that is we recognize revenue when we actually earned it. So for example, if we send out an invoice in March, but we didn't actually do the work until April, then we should recognize the revenue in April. And we should recognize any expenses associated with that revenue also in April, even if the vendor, let's say a vendor does some work for us in April, but they don't send their bill to us till May, we need to do an accrual or redate that bill so that it aligns with the revenue. And the value of that is that then we can start looking at consistency month over month in how our business performs, right? So the purpose of financial statements are to show us what's happening in our business. It's for us to look at them and say, why is my margin down month? Something operationally isn't going right. They're not pricing right. My team's being inefficient. I had too many returns. Like what's happening that then me as a CEO, I need to go investigate. And if our financials aren't on an accrual basis, then we get this situation where we have these large swings all over the place. So we look at them and we're like, that's not really what's happening. I'm just not going to look at these or trust these. And then they totally lose the value. That's the value of accrual accounting, is that it helps tie back our financial results to our operational activities.
Okay. So now I'm excited to go into why make the switch. I'm a, small business owner and I've got my books in cash basis, doing okay. I have not made the switch yet. I don't know if I'm running into any situations that I might need to.
It's funny, you know how I feel about profit first methodology. So I'm just going to do a quick plug here. The thing about profit first, if you don't know about it, it's a methodology by Mike Cowitz. Once you get cash, you're putting it in buckets. When you have a real set of financials that are on an accrual basis, it tells you how profit happens rather than telling you what to do with your cash once you have it. I was talking to a prospect yesterday. They came to me because they're trying to get an SBA loan. And the books were a mess. So I got the books. Clearly a failed attempt at profit first, a complete disaster. So I emailed the owner of the business, Pilates business. And I was like, is this a failed attempt at profit first? She responded back, was like, LOL, funny, not funny, but yes.
So you've seen this in the wild, people trying to set up multiple bank accounts and not sticking to it. It's a failed methodology for some because they don't stick to it or don't have somebody working with them. What was the outcome? What happened?
My point is the profit first method is a DIY attempt to get similar results of what, like basically you're taking your cash and putting it to buckets, right? If you're on accrual basis, if you're looking at a proper set of financials, we've got buckets for cost of goods sold
You're
buckets
already
for
accounting for things they're estimating with the profit first method. You just go ahead and dumping it to, but with this accrual method, you're actually seeing the real data.
Well, what happens if you don't do accrual basis and you look at your P&L, it's confusing. And so then it's like, okay, now I have to use this other method, profit first, in order to get me these results that I'm looking for. If we move to accrual basis, then when you look at your P&L, it makes sense and you start seeing things that are margins that are off, and then it helps you take action. So the first sign that it might be time to move to accrual basis is when you look at your profit and loss statement, it's lumpy. And what I mean by that is if you were to visualize it, it looks like a roller coaster. It's large swings up in one month on revenue and your net profit, and then other months it's negative. When you look at the financials, it's really hard to make sense of what happened in your business that month.
Well, that's because you don't have any predictability in these swings, right? There's no predictable revenue, or what's the reason for some of these big swings?
Okay. Yeah. So I'll give you a couple of examples. So one, let's say you do big projects. So we work with creative agencies, right? They may invoice for a $1 million project up front, or they may invoice for it 3 times, but it's a year-long project. In QBO, if you just send out 1 invoices or 3 invoices, it's going to hit in whatever month you send the invoice. When really, if we did it on an accrual basis, if it's a month-long project, we should take the total revenue that you will end up earning over that entire project and divide it by 12, and then recognize the revenue on your P&L over those 12 months. And then on the expense side, if you have contractors, your employee costs will probably be somewhat stable. But if you have subcontractors that you're using and they're sending you bills and you're paying them at different times, right? We want to date their bills in the month they perform the service or accrue their expense to align with the revenue earned.
At the time they're working on the project being paid for, that should be aligned. Usually there's big gaps between when something gets paid, when something gets invoiced, and when everybody's kind of delayed in all of those processes. And what you're doing is taking all the actual data and aligning all that. So an invoice comes in and it says May on there. You're making sure that that's when the work was done too. Aligning those months.
And that's the value of a good AP process. So one thing that I always push clients to do if they have more than 7 bills a month is let us handle your bill pay for you so that we can see those bills as they come in and date them properly, rather than someone on your team paying them. Then we're just reconciling the cash transaction and we don't know who the vendor was or what the purpose was or what project it was for or what time period it was.
It's taking a more active role in recording and entering a lot of that data because you're actually seeing the money move.
Exactly. And then we also can, we've had a whole episode on why you need an accounts payable process, but then we're also controlling cash going out because we're queuing up all those bills or recording them in the correct period. And then we're paying them out and we're making decisions about cash leaving our bank account. So that's a cash management thing too. So another quick example would be SaaS companies, right? Software as a service type businesses. A lot of them might have quarterly or annual subscriptions they get paid up front for.
Yep.
And so if a company
paying a whole year up front, right?
Yeah, getting paid for a whole year.
A lot of companies.
What we have to do, and where it gets complex, is we need to, again, we want to smooth that out and recognize that over the quarter or recognize it over the year, depending on what period that covers. And so from an accounting perspective, it gets more challenging because outside of your accounting software, we have to maintain what's called a revenue recognition schedule, taking each subscription and then over 12 months, dividing it up, doing a calculation, and then taking the total of all your clients that have earned revenue in a single month and booking that as your revenue for that month. Again, when we were talking about your just switching to accrual basis in QBO or Xero, why that doesn't work is we have professional accountants have to manually do these things and make journal entries into your accounting software to get it on accrual basis.
We've addressed a lot of these reasons that your financials might be lumpy or might have these, activity or a month with a lot of revenue. So now let's kind of talk about other reasons. So let's say I don't fit into that. My revenue is not lumpy, right? I have a business that's kind of humming along Everything is paid monthly. Everything is on a subscription. There's no outrageous differences there. So do I still need to switch? What's the next reason that I might want to potentially switch?
Reason number 2 is you have third parties looking at your financials. This could be a banker. You want to go get a loan. It could be a potential buyer of your business. It could be a potential investor. So
what about board of directors, maybe?
Yeah, or even an advisor that wants to come in and they want to be able to interpret your financials so they can give you better advice. That's very common too. So while you may know everything in your business in your head, a third party uses financials. That's like the intermediary of translating everything that's happening in your business so that they can either trust what's happening, the health of your business, or advise you. And a lot of times bankers, right, they're looking at things on the balance sheet. When we're on accrual basis, we're doing things on the balance sheet to really accurately show, if you have prepayments coming from customers, that's actually a liability. If you've prepaid expenses for a year. So the same thing, like the opposite of when a customer prepays you for a year, right? You might prepay expenses. And so we don't want to expense that right away. We want to show it as a prepaid expense. It's an asset on your balance sheet, but make sure financials look better if you were to prepay something because it doesn't expense it for the year. So again,
exactly. If you're in a month where you're prepaying for a bunch of software and you're prepaying for 12 months of that, and it's $15,000 or something in that 1 month, then it looks like you had a loss that month if you don't properly record it.
And then they're going to be like, what's wrong with your business? Why are you losing money now when last month you did well? And it's that going big swings again. So
yeah. So
we want to build trust.
Any kind of third party looking at that, they would prefer the books in a more accurate accrual basis.
Yeah.
I wonder if that's the definition of accurate and accrual, similar definitions, because it's more accurate.
We have to look at the Latin origin of ac.
Possibly. I wonder if accounting is also from that same origin.
Wait a second. Accrual.
Accounting. It probably is all related.
One more thing. I think let's talk for a second about GAAP, just real briefly. So GAAP is generally accepted accounting principles. And the reason I say accrual and not GAAP is because accrual accounting is based off of GAAP methodologies. And for the most part, they're very similar. But GAAP is very strict and indicates like you need to be on, I call like strict GAAP, right? Like accrual, I would say is GAAP-ish. And then there's strip GAAP, which basically means your investors, or if you're not a nonprofit or whatever, you have to get an audit by a CPA firm where they come in and they make sure you're following exactly the GAAP rules, and those rules may come out and change over time. Auditors who are auditing your books have to stay up to date on the latest requirements, and they have a checklist and all these things. So most small business owners do not get a GAAP financial audit. And so we're doing accounting in such a way that it's reasonable for you to make decisions and is close enough that third parties can rely on it.
Fair. Yeah. And GAAP is a requirement if you're publicly traded and audited, and larger companies need to worry about that.
If you're trying to get a bank loan, or if somebody's buying your business, they will request GAAP financial statements. They're just asking for accrual basis financial statements.
Yeah.
Don't freak out. Unless they're saying, I want audited GAAP financial statements, the auditors will come in and tell you what you need to change to make it to GAAP basis.
Sure.
So don't freak out if somebody asks for that.
Yeah. And that's usually a requirement that's imposed upon them well before they're like in the range of deciding to make this switch. They already have to. In some cases, if they're required to have GAAP financials, they're probably already required to be an accrual in that case for tax purposes and other reasons. Anybody small enough to be concerned about that, you probably don't have to have GAAP financials, but GAAP-ish is preferred and
GAAP-ish.
More accurate. Yeah.
Yeah.
Let's say I don't have anybody looking at my financials. What's the third reason I might switch from cash to accrual?
The third reason is if you want to do any forecasting or budgeting,
planning for the future.
Planning for the future. That's sign number 3. You may want to switch from cash to accrual.
How does accrual help me plan for the future?
If we go back to big swings, lumpy revenue, we're trying to predict the future, but the past is chaotic. How do we predict the future when we don't understand the past? And we also want to know, like, if we want to hire an employee, what does that do to our profitability? And when you're on a accrual basis, you're looking, if we go back to some of our core episodes, the 50-30-20 rule, we're looking at margins. Now we can start on accrual basis. We can start doing them every month. And then when we build a forecast and we're projecting out revenue, right? I know if I do $1 million more in revenue next year, 50% of my revenue is typically direct costs. Now I can build a model based on percentages. So it makes it easier to like build that model based on those historical percentages.
Aha. So building models and forecasting for the future, any type of cash flow forecast requires accrual basis accounting. And so that is primarily the reason why most businesses, if they're financially focused and they're looking forward and they're trying to plan for their business and hire and look at capacity constraints and just look at the future, you need a cash flow forecast, or you need something that you can look at. And so you're going to need accrual basis accounting. So it sounds like most businesses that are looking to grow at about $1 million, they probably should look at switching over to accrual.
Yep. And just know that switching to accrual is more expensive in terms of accounting fees because you need someone who's more experienced than just transaction booking, and it's more time consuming and it requires more experience. So it will end up costing you a little bit more, but there is value there in being able to make quick decisions every month. When you look at your financials, you'll be able to make quick decisions and turn things around. So, and then if you need to get a loan or sell your business, you don't have to go through this project of trying to go back and.
Well, it's already being done. And those are some of the other reasons too. That's just not the three telltale ones at this stage of a business owner. It's really mindset now. This is what it comes down to. If you are looking to grow your business and you're looking to eventually sell it or have some kind of potential exit in the future, and you're looking to continue to grow, you probably should switch to accrual.
It's really hard to go backwards and recreate on accrual basis, especially if you don't have records of like your bills and all of that. So
yeah, it's much harder than doing it in real time.
Yeah.
Starting something at this stage too. Sounds great. Sounds like I should make the switch to accrual if I'm looking to grow my business. Thanks for the tips.
Of course. So let's just dive into one more thing here for practical considerations. If you want to make the switch, when's the optimal timing and things to be careful about?
So you've convinced me. Now, when should I do it?
Right now, we're recording this mid-year. We're in August. And so if you came to me at this point and you're like, Nikole, I want to switch to accrual basis, what I would probably recommend is I would say, let's just get your revenue on accrual basis this year. Let's start with that. So
let's dip our toes in the water.
It's a little bit easier just to start with. And usually your overhead expenses aren't going to have a big change. They're not going to swing that much. And then depending on your COGS or direct costs, if you have a lot of labor that's just being paid through payroll, it's not going to significantly change either. So your revenue will help you go a long way. So what's going to end up happening, right, is because probably in like January or February of this year, you received payments from customers where you earned that revenue in 2023 last year.
Mm-hmm. Sure.
Okay. So that means what we need to do is we need to back out that revenue. So your revenue is actually going to go down. And then what I would do is I would just put that what I call below the line. So I would take it out of your regular revenue and I would put it in other income at the basically below your operating net income at the very bottom of your profit and loss statement. And then I'm going to show in January your actual revenue earned and then align that for the rest of the year.
Moving forward, things should reflect reality because in 2025, you won't see 2024 revenue.
That's right. So you're going to have that one weird thing happening in January. I would move everything into January so it only shows up in 1 month. And then next year you won't have to look at it again. You'll be on accrual basis.
See it again. Yeah.
But be careful in this because if you are going to go sell your business, buyers don't like is a change in methodology mid-year, or like usually they're looking at the last 3 years of financial statements. And so if they're looking at 1 year, it's on accrual basis, and then the prior 2 years are on cash basis, it can create challenges, can create issues. So I would recommend doing this, a few years before you plan on selling. Now, if you are planning to sell and they want to see it on accrual basis, then we may need to go backwards and do a project to get your at least last 2, maybe even 3 years on some sort of accrual basis, right? So then it turns into this big project. So that's why it's better.
The buyer is going to require that anyway.
They're going to ask for it and require it anyway. Sometimes for smaller businesses, you can probably get away with cash, but it may end up decreasing the value just because there's a lack of trust there. They can't figure out what the financials mean.
Yeah.
We want to show it nice. And then also, like, in terms of growth of the business, if you can show that the business is consistently growing each year over year, you're going to get more value out of that.
Right. This was great. Is there anything else to summarize or recap?
Yeah, so let's just go to summarize. So purpose of accrual is so that you can actually use your financials to make good decisions. If you're around $1 million in revenue, you should start thinking about switching from cash to accrual. The 3 signs are you have lumpy revenue, and it makes it hard to interpret your P&L, or I would say lumpy revenue and or lumpy expenses. Third-party reliance on financials, and then you want to start planning for the future. Those are the 3 signs.
I think it's all about mindset. If you're looking to grow your business and you're at about $1 million, you should probably make that switch now.
Why not? So if you are interested in doing that, hit us up, momentumaccounting.com. We can help.
Dope. All right. Peace out, students. Thanks for joining us today.
All right. Thanks.
Class
good to
dismissed.
see you, Scotty.
It's good to see you. Peace out.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like you're running nowhere fast. You work hard, but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports, but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cash Flow Show. This is the Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. Cash Flow Show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cash Flow Show. The Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. Our advice will take you far.